All right, hey everyone. Mark here. Thanks for joining me for another GreenBridge Investing market analysis. So today's a market holiday, so I want to, I'm going to keep this within a reasonable amount of time. Hopefully, want to go over Bitcoin real quick, and I also want to talk about what the stock market looks like so that we can get some ideas of what type of scenarios to expect over the next few days. Of course, I want to spend most of the time answering your questions. So again, if you're new to the channel, please share your questions in the chat or symbols or markets you'd like to see so I can get to them once I get through the chat section. Also, if you're new to GreenBridge, please make sure you press the like button if you like the video, and also register for the channel. Every time I do one of these or the Talking Market show, you'll get an email notification from YouTube. All right, so let's get this thing started. All right, so for that, it's a holiday, so I can't speak as quickly as I usually do. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, before we get to the Bitcoin situation here, hold on, let me pull that up. All right, before we get to that, here, just give me a second. And there, you should see that Bitcoin chart here momentarily. Okay, there you go. Oh, hold on, that's me. You're not supposed to see me. Hold on. All right, let me get this over here. Let me get this right. Okay, there we go. All right, now, so before we get into that, I want to take a look at the news real quick. Yeah, I am planning to appear in these videos soon, just not today. All right, now, let's take a look at the economic calendar. Again, I only want to spend like a minute on this because it's important to be aware of what's going on, scheduled, what's scheduled for the week in case, you're in a Forex position, or it can also affect the stock market. All right, so let's take a look at that real quick. We're looking at these, Australia, right? Royal Bank of Australia meeting minutes. These are not, it's not a big deal. Europe, okay, GDP for the euro, not a big market mover. For the pound, consumer price index, again, these aren't big market movers. All right, that's actually the 16th. On the 17th, which is Wednesday, we have consumer price index for the GDP, for the GBP. U.S. retail sales, again, not big market movers. I wouldn't worry about those. Also, Canadian consumer price index, not a big deal. All right, so here's our first potential big deal, and that's the U.S. FOMC minutes. That right there is that can be a potential market mover if there are any surprises that were not covered when they had their meeting, right? Occasionally that can move markets, but in recent times it hasn't really been a big deal. Now, the 17th, again, we have unemployment rate for Australia. Not going to really not a general market mover. Now, we have this here on the 18th, ECB monetary policy meeting accounts. I guess that's like the meeting minutes. I don't know exactly what that is, but I wouldn't worry about it. Okay, the rest of this, German market manufacturing PMI, none of these are big market movers, right? And as I look at the rest of the week here, retail sales for Canada, retail sales for New Zealand, these aren't, again, I don't see any NFP. I don't see any, FOMC meetings. So those are usually the major catalysts that can change something, okay? So just something to keep an eye on there. Now, let's get into the charts real quick. Now, by the way, if you're new, we just want to mention real quick, if you'd like to know more about GreenBridge Investing, you can take a look at all the information on the description portion of this video. I listed it all there. Tells you what we do, and it has all the links. Okay, so I don't have to spend 3 minutes talking about our pricing. It's all there. And please check it out. Okay, we do have a 7-day free trial. All right, so let's get into Bitcoin first, and then I'm going to get to your question. So again, if you have a question, please share it in the chat. I see we have a couple of questions in there, so that's cool. From Ricky and Travel. Hey, no problem, guys. So I'm definitely going to get to your question there, Travel Berlin. So anyone else, again, please share your symbol or the market you'd like to see so I can get to it. All right, now, let's take a quick look here at Bitcoin. So I wrote an analysis. I actually shared it on TradingView earlier today. And I talked about this wave 5 situation, okay? This is a wave 5 of 5 as we've been talking about. And I can count 4 waves in there, right? We have 1, we have 2, we have 3. Now, this area gets tricky up in here, right? This could be a mini 4 possibly, but it's not really confirmed yet. Just because there's a higher high doesn't mean it's a 5, okay? Wave 4s can actually touch a higher high and then pull back a bit right before the 5 of the 5 comes. If we get that 5 of a 5, it can possibly take us to the mid 50K area, okay? It's possible. Wave 5s tend to be very strong, just like wave 3. They tend to extend, okay? If we get something like that, we'll probably see it across the board, right? I would imagine many alts are going to follow. But there's a couple of important things you need to keep in mind. After wave 5, as we talked about, of an impulse wave, often what it follows is a corrective wave, right? In this case, that corrective wave will be broad wave 4. And broad wave 4, whether it begins around the 50K area or it begins, much higher, again, it's anyone's guess where it will begin. People that think that they can predict where it's going to begin, they're just fooling themselves, because only the market can determine that, okay? All we can do is when we get information that hints toward, okay, we have a reversal at a major area, then we can say, okay, it may be beginning. But trying to call it in advance is just no different than gambling. So wherever it decides to develop, okay, the mistake not to make is to get in too early. Now, I have some important levels on this chart, all right? I cleaned up my chart a little bit to make it a little easier on the eye. But this 32,500 area, that's the trend support. So as long as price stays above that support, all right, we can pull back, we can fool around, we can consolidate, whatever it wants to do, and the trend, the broader trend, will still be considered bullish, which means as a swing trader, I will be interested in waiting for reversals around a key area like this area here. What is that, 45? I'm sorry, the 40K area. That would be a nice area for a swing trade long, right? It's a previous resistance and it will act as a new support. So right now, that's what I'm looking at. If we clear that, then I want to see how this thing develops in the 30Ks. Now, from the point where we are right now, either scenario is pretty equally possible. All right, this is a very tough spot to be taking new trades. I would not take any new swing trades right now. It's very aggressive. Yes, we do have a bullish pin bar that's developing here off this minor support, which means there may be some room to go higher. That's all true. But the risk is just too high, okay? Because, I mean, the pullback, sure, you can use this 45, or what is this low here? Yeah, basically 45K area, minor support. You can use that as a reference point to define risk from. But the chances of getting stopped out there are very high. So, I'd rather wait for a deeper support and get kind of like what we got back here. This is ideal when we get this type of price action back there, right? Of course, we took that swing trade and it worked out very well. So that's what I'd like to see develop over here. All right, so that's pretty much Bitcoin. That's what I'm looking for. We have to see how this thing plays out. Now, over the rest of the week, we'll have to see which way the market chooses. Now, there's been a lot of talk of all these altcoins. Here, let's take a look, like DOT, right? DOT, USD, Polkadot, whatever they call this thing. Here, you can see the swing trade that I sent out. I think it's here. See that swing trade? Look at that, right? Went to two targets. Today's high is 29.54. You can see our third target is 33.50. So it reached two targets. Look at this nasty candle, right? This nasty candle can shake out a lot of people if you don't know what you're doing. Now, some people who don't know what they're doing, they stay in it anyway, and they don't realize that the risk that they're facing. The point is, a lot of these things are looking like this. They're looking very frothy, okay? And they're near highs. Look at Litecoin, right? Look at Litecoin. Another one had this amazing breakout. Now you're getting this bullish pin bar developing right here. It looks like it may have another push higher in it. Again, following Bitcoin. Okay, no problem. But when these things pull back, it's not going to be pretty. And these prices, buying it in these areas is just, it's extremely risky, okay? Especially for short-term oriented trades like swing trades. Now, there's an inventory question here, so I'm going to answer that about position trades or investing. But I just want to highlight, some of these coins here. Look at another AVAX, right? Here's another one that I've been watching. Look at that pullback. So people get caught up in this nonsense right here because they think it's just going to keep going vertical like that. Now, the people that buy it up in this area, okay? Because at the time, remember, they don't see the red candles. At the time, it looks like this. So it looks like it's just going to keep going higher and higher and higher, and that they don't want to miss out, right? So by the time they finally get sucked in, then this is what happens, okay? You get the inside bar, half the people are dumping it, and then it starts to shake people out. This is a cycle. It's a normal cycle. It will occur in everything. So this is what you need to be prepared for. Now, there is a pin bar, sort of. That's not really a true pin bar, but it's the same idea developing now on something like this, which could be a potential swing trade. The point is, you have to watch out for these herd mentality situations. And when things look their best, that's often the worst time to get in. Now, I'm talking to you from the swing trade perspective. Let's talk about from the investing perspective. And let me pull Bitcoin back up here because we have a question here in the chat. You always say manage risk with correct sizing and inventory investing. Okay, so inventory, position trading, investing, those are all synonymous. They all mean the same thing. Could you provide some more detailed examples? So that's a good question. When it comes to, see, a swing trade is a trade that's short-term oriented. It's good for a few days, maybe a few weeks, and it has very, very defined orders, right? You have your entry, you have your stop loss order, you have your targets, right? So when you saw that like dot trade that I showed you, for example, that dot trade had very specific orders. But our portfolio management or inventory or position trades, which is all the same, we don't have specific stops, right? And people say, how can you not have a stop? Well, because we manage size with risk. We manage risk with size is what I meant to say there. So the question is, you say you manage risk with correct sizing. The sizing is a function of how much you are allocating toward the market. So this all has to do, first of all, with planning. If you don't have this planned, then you're just asking for trouble, and you're most likely going to become at mercy of the market, because what typically happens is when you don't have a plan, you get too big too fast. Okay, so the plan begins with you want to have a full allocation predetermined. What that means is, let's say you have $10,000 and you say, okay, I want to invest this $10,000 across Bitcoin and a few altcoins that I like. Okay, now keep in mind, if you do something like that, it's all basically the same trade. Some altcoins will outperform and they'll do better, so that makes sense. But it's basically one big Bitcoin trade that you have to think of it that way. These things don't trade on their own. Now you have some of these wild ones that have been doing like their own thing, right? Let me see if XLM, has that been doing its own thing? Well, not really. It still looks like Bitcoin. How much is that thing? 60 cents almost. 51 cents. Okay. So you'll have these things that start to go off on their own, and that's really what you want to benefit. Look at VET, right? They start doing things on their own and they start to outperform. Okay, that's cool. But when if you're in the position at this point, this is your opportunity to average out, not in. Okay, the in prices were a long time ago, and if you weren't in on them, then now you're chasing. Okay, so here's the thing. When you're talking about inventory, there's no wrong price, really. It's really more of a timed investment. So like I was saying before, you start out with a particular amount. So let's say it's $10,000. Now, you're going to split that $10,000 in half. Half of the money should go aside and should be liquid capital for unique opportunities. Now, that's a very conservative thing. That's something that I like to do. Not everyone likes to do that. Okay, some people like to be 70% invested and 30% in liquid capital. I prefer to be 50%, but that's just me. Okay, and that money is money you do not touch until you have very unique opportunities. Very unique opportunities are rare, and you may see one every couple of years. That's what that money is for. So if you don't have the discipline to treat it that way, you're going to have problems. But that's the way I like to do it. Now, the other half of that money, the other 50%, so basically $5,000, you're going to distribute that across different coins, right? In the case of investing in coins. So let's just say it's something like VeChain, right? VET, USD. So let's say you don't have any of it, okay? And you want to buy some because it looks amazing, right? So does everything else. Well, this is not a place to overweight. So now out of your $5,000, let's say you're going to allocate $1,000 to 5 different coins, okay? That's $1,000 across 5 coins. That means you have a $1,000 allocation or objective, and now you can split that $1,000 into smaller positions, right? So now $1,000, if you divide that by 10, what is that? It's $100, right? $100 per purchase. So now you're free from the chart. Forget the charts because they're not going to really help you with this, right? You're looking at basically just prices now, and we know that we're at a high. So you can invest $100 here, all right? And if it goes higher, great, you have a little piece of it, right? If it doesn't go higher and goes much lower, well, you still have the rest of your money sitting aside, right, out of that $1,000. So you're not really heavily exposed. You're not going to be at the mercy of the market. So now let's just say VeChain pulls back to a support. And again, you don't have to use charts for this. You can just do it over time. So the first of the month, let's say today's the 15th of the month. So on the 15th of the month, you make your purchase, about $100 worth. Okay, cool. But then, you know, by the first of next month, you know, VeChain just so happens to be lower. Okay. And that's when you make your second purchase. So you realize if you do it twice a month, right, and you have 10 units to purchase of $100, it's going to take you what? 5 months, right, to have all 10 units purchased. So over 5 months, you're going to have an average price. That is how you manage inventory with size. Now, if the market gets hammered during that period, you don't have to keep putting $100 in. You can pause and say, well, let me wait till it stabilizes. Or if it really gets hammered and the prices are become hated, instead of $100, you put in $200 on that particular allocation. So you're protecting yourself from basically really adverse moves, and you're able to capitalize on them. But you have to have the patience and the discipline to manage such a plan. People usually don't. They just throw it all in and they hope for the best. But that doesn't work. Okay? You're asking for a lot of trouble when you throw all your money in at one price. So I just explained it to you there in a few minutes. I hope that answered your question. Okay. So, Pippi, would you look at AS, okay, CYL and CEN? Okay, cool. So let's take a look. CYL. So yeah, so travel. That's basically what I just told you. I don't think that's the right one. Let me see. That's basically how we guide our members. Now, of course, if depending on how complex you want to make it, we use charts and stuff like that, but we're using them from that perspective. So we help our members, pick the right levels to make these purchases and stuff like that, right? So it adds a lot more clarity, but it's not absolutely necessary. Okay, so ASX right here, Catalyst Metals, let's take a look. So this is the chart that I got. All right, let's take a look at this thing. So for a swing trade, Pepe's talking about here, and what do we have? Well, so since the April low, this thing hasn't been doing great, right? Compared to many other charts out there. You have basically a range-bound situation, okay? And that range goes back to, let's see, April, right? This is like your structure you're dealing with. And since then, it's been inside of that range, okay? It's been a long time, almost a year. It's been inside of that range. More recently, it's found a double bottom support, okay, at basically the $2 area. Now, since then, you have this outside bar which developed today, or the most recent. I guess that's today, or it says pre-market. So I guess for the Australian Open, that's where it's going to be. You have a double bottom situation. So in this scenario, yeah, this isn't bad for a swing trade. You can define your risk off of this $2 low. Basically, so you want to give it like maybe a stop in the 190s or 180s. That would make sense. Give it some room. And its potential, your first targets should at least be 1-to-1. So if you're buying this thing at, let's say you buy it at 2.25, okay, just to use round numbers, and you're risking $1.85, you're risking 50 cents, okay, which isn't horrible. And the question is, how much is it if it gets to this mid-range point here? 234. So that's that's less than 1-to-1, so that wouldn't be a good place for a target. Okay, so you have to look higher, right? Your target one should at least be 50 cents. So probably in this area here would be good. well, actually, well, if you're buying at 2.25, you're gonna have to sell it around 275, right? That should cover your risk. That's way up here. All right, so that's what you're looking at if you're risking 50 cents in this situation. And that's right in this resistance area. As you can see, you have this like triple top resistance, so others will be looking to sell there as well. So that's something to keep in mind. I mean, if you sell earlier, it's okay to, you don't have to have one-to-one if you're having multiple targets, but keep in mind your average profit should be greater. Your average reward risk should be greater than one-to-one. So just something to keep in mind. This thing does not have a clear bullish trend. So getting back up to this 275, $3 area may be a struggle for it, but that's the range high. And that's probably the best scenario to consider. Well, I mean, will it break out and go further? Anything is possible, but based on this structure, that's what you're looking at. Okay, so thanks for bringing that one up. Let's see what else we got here. He's asking also about CEN. So let's take a look. CEN, Australian Stock Exchange. So energy, okay. Now look, much better structure on this chart. Let's take a look. So I see basically a bullish trend, higher lows, higher highs. That's nice. Nice corrective move, right? Gave back a good portion of it. Okay, that's all good. Let's take a look at support and resistance. So you have a support right around this area where it's fooling around right now, and you have a bullish pin bar. So that's all good. Okay, for a swing trade, I like the setup. The next question is, what is the potential? So in these situations, we don't have much structure. There's not a lot of structure here, right? So I would look at this area right there as like your potential, because you're looking for a retrace back to like maybe mid-range. That's reasonable. Can it go higher? Yeah, but you want something that's within reason in terms of probability. So I would look at that area to measure potential targets from, and right in the middle of that, you're looking at basically $8.50, and this thing's at 713 right now. So the low of this candle is 671. So you're risking probably close to $1, right? So 713 is the close. Well, okay, I'd say 650, right? So you're looking at maybe, let's just say 80 cents of risk. Okay, 80 cents. So you need to make at least 80 cents. Yeah, and that's reasonable. 80 cents is not even inside this range, inside of this target box. Not even close, right? It's like it's around here somewhere. So it's doable, okay? If it gets into the middle of the range, your reward risk is within reason. And if it works any further than that, hey, that's great, okay? So this is the area where I'd be looking to distribute or reduce risk. Place your targets somewhere in there if you're taking the break of the high of this pin bar, okay? But nice setup for a swing trade long. I like it. Thank you for bringing that one up. Okay, so let's see what else we got here. Oh, okay, I got it. My biggest regret is I didn't do this for BTC at the right time. Well, so travel, everyone's in that position. A lot of people are, because it's human nature, okay? Human nature is what leads to inconvenient timing. And we all go through this because why? We're stimulated by things that look good, and we're discouraged by things that don't look good. And it has to be the opposite, okay? You have to be attracted to things that don't look good, because that's where the risk is the lowest and the opportunity is the greatest. But the reason why there's a herd to begin with is because everyone reacts on human nature. And if there was no herd, then we wouldn't make any money, because the people that learn to capitalize on that human nature are able to do the opposite of the herd, and the herd is the one that gets you into your position, and they're the ones that take you out. So you need them, okay? So human nature, you're learning how to capitalize on the faults or the weaknesses of human nature, right? And that's how we all start out. Markets are not a convenient place for human nature because of their abstract randomness, all right? On top of that, it's amplified even further by all the garbage that we read and all the stuff that we see that's there to stimulate us to do things. That's where the fear of missing out comes from. Okay, I hope I can manage and do that. I'll sign up for the site and give you, okay. give you an idea in chat, maybe. Well, so travel anyway. So we talk about this stuff in the chat room all the time, and we really like help our members see things from the contrarian perspective when it comes to inventory. Back in the March lows, March and April lows, we were buying Bitcoin, we were buying stocks. A lot of people thought we were nuts. We got a lot of negative feedback, like on TradingView and that kind of stuff. But that's typical, right? Because a lot of people think they know what they're doing and they don't, and this and that. So they are only going by the obvious. If you're using things like oscillators and all that, they're only going to amplify the obvious, and that doesn't help, all right, at all. There's no advantage to doing that. So anyway, okay, cool. All right, so let's see, what else can we take a look at? Anyone else have any other stocks for me to take a look? How about some coins? So while I'm going through this, I got plenty of time here. Let's take a look at some stock market stuff, right? So NSX, look at this thing. So on Friday, this thing closed very strong. Look at this nonsense here. And this thing it's the CFD of the NASDAQ 100, and it just keeps going higher and higher and higher. It broke out of this blue box. The blue box is a reversal zone, and it didn't reverse inside there, okay? Now, it doesn't mean that it still won't reverse. But if it was going to reverse, this was the high probability area for that to occur, and it has not. So that's a concern for shorts. All right, I'm short, but I'm short in a way that the risk is very controlled. As many of you know who are in the chat room, I have the UVXY calls, March calls, right? And they're options. So if I'm wrong, like I said, if I'm wrong, and it was a very high risk trade, we were very clear on that. If I'm wrong on this thing, they're not going to shake me out because my risk is very well defined. It's the premium that I paid. So if this market just wants to go higher and higher and higher, well, I'm not going to be at the mercy of the market because I can only lose a fixed amount, and that's that. All right. Now, if this thing turns sometime between now and the third week of March, which is still very possible, those calls will go from worthless to worth something very quickly. Right? That's how it works. So that's why I'm just going to sit on them. I'm not going to keep putting on more. I'm just going to sit on them and see where this thing goes. Also, holiday price action carries very little weight. There's no volume. So since there's no volume, I really this is not very meaningful. Yes, we had the buy signal a few days ago. I talked about that. I think this was on Friday, right? No, or Thursday. And yeah, it pushed a little higher, but this price action doesn't mean much in the midst of a holiday. So we'll see how that goes. Now, this is great for swing trades in stocks. If you have stocks that have been, it'll help support those stocks. That's great, especially for highly correlated stocks. But we like to play the stocks that are not highly correlated in case you get some sort of mini pullback, right? Like we've been seeing some red candles on occasion. The less correlated stocks aren't as affected by that, and we like to see that, okay? So let's see what other questions I have here. Hey, Gabriel, good to see you. No problem. Hey, Hamid, could you please look at PFE? Sure, PFE. I believe that's Pfizer. All right, and let's back it up here and see what's going on. So now Pfizer is typically a market stock, but it's been affected by different factors or variables in recent time because of all the stuff that's been going on. And so I won't really count this as a highly correlated stock right now, although it can change. The general trend is bullish because there are higher lows and there's a higher high here. Now, more recently, this corrective move, it tried to find a double bottom back here and it failed. All right, no problem. It's trying to find another double bottom again off of this support area. So I don't like the fact that there's a lower high in place. I mean, I'm not too happy about that if I was going to look for longs, because while some people argue that that's a bearish trend, on a short term, right, if you're looking at a 1 hour chart, you can argue it's a trend, but on the bigger picture, it's still just a corrective move, right? The broader move, but from that November low is still what's in play, okay? It hasn't fully taken that out yet. So it's possible to get a reversal here, okay? You just have to keep in mind that you're competing with this lower high. Now, the double bottom that's developing here, let's take a look. You have an inside bar, sort of. Well, it's not really an inside bar, but it serves the same purpose. And it's off of this double bottom low, which is what, 34 1/4. So, all right, you can measure risk from there. I would say 34 even. 33.75 area would be a place to consider a stop, something like that. And targets should be distributed somewhere, what is this, 36s, 37s, 38s. And if you're risking basically less than $1 or $1 to go for, $1.50, $2, $3 targets, that makes sense. So I do like that. The reward risk makes sense. The structure that's developing makes sense. You can measure risk from there. It's just the only thing that's working against this is this lower high area. So you have to keep that in mind. If price can retest it, definitely want to unload some there. Okay, that's what I would say about that. But otherwise, again, this is going to be heavily affected by news. This stocks, but all these biotechs and all these pharmaceutical related are very sensitive to news. I don't trade news, as you all know, but a piece of good news can come out and really get this thing going, or a piece of not so good news can come out and break that support. So just something to keep in mind. Okay, again, you don't have to be all over the news, but just realize that can move things quickly. All right, so that's that one. I definitely like that as a long. Arno, hey, I'd be curious about your portfolio management, sizes, distribution. You started talking about it on Friday and then cut yourself off, but actually I think it's super interesting. Okay, so I'm not sure what you mean by my portfolio management. So for GreenBridge, we have a couple of different portfolios, if that's what you're talking about. And so we have our model portfolios, and each portfolio handles a different asset class. Like we have one for stocks, we have one for Bitcoin and the altcoins. We have a few different ones that we're. Oh, okay, no problem, Pepe. So we have a few different ones, and we treat them differently than we do our swing trade strategy, right? The swing trade strategy is its own thing, and it has its own set of rules, and we use separate money for that and all that kind of stuff. We don't mix them, right? We don't want our swing trades to turn into investments. Okay, so all right, so like for example, gold. All right, gold and stuff like that. In fact, let's bring up gold because gold has been very interesting. So gold, people have been asking about investing in gold, and as far as a portfolio comes into play, instead of buying gold outright or buying physical metals, especially if you're not familiar with those, how that business works, it's not a good idea to get into those. Instead, you can buy stocks, okay, gold mining stocks, which will follow the price of gold. They will benefit when gold goes higher. And right now, gold is a very good example of a market that's out of play. That's a market that's hated. Okay, pretty much it's out of play. You don't hear people bragging about gold really right now, and you don't hear those guys that are saying gold is going to go to 5,000 by tomorrow. I'm sure you could find them if you look for them, but they're not like in obvious, they're not making headlines right now, right? So here's the thing: gold mining stocks, when gold pulls back, they have these little pullbacks like it's having recently there. And look at this, right? So this is today's candle. Look at yesterday's candle. This was Friday's candle. See the pin bar? I was actually going to send that out as a swing trade long, but look at this candle now. So that's an inside bar, okay? Not much price action there. That's still a potential setup if we take out the high, but I'm not going to go by the inside bar high. I'm going to go for the pin bar high. Anyway, the point is that's a swing trade. When it comes to position trades or investing, right? Like I was saying earlier, I like to split my portfolio in half. I like so let's just say, let's use $10,000 as an example. If I have $10,000 to invest, now I'm not going to invest all my $10,000 into Bitcoin because I know better than to do something like that, okay? So what I want to do is I want to spread it out across different asset classes. Now I'm going to cut that in half, and 5K will go into the liquid account where it will not be used for anything other than a very dramatic, unusual situation, which means pullback, okay? And those situations only come around every couple of years. So that money's going to sit there. Now, some people don't like that idea. Some people say, well, inflation and blah, blah, blah. I don't care about that. Because when the money does go to work, it will outpace inflation eventually when the money does go to work. So I'm not going to sit there and worry about all that stuff. So instead, I'm just going to put it aside. Now, the other 5K is what I'm going to do is I'm going to split that up, okay? Now, the other 5K, so again, if you have $100,000 to invest, you just basically, you just change the percentages, right? I mean, 50,000 goes aside and the other 50,000 is going to be split up into different quadrants, we can call them, of different types of strategies, right? We'll call them strategies. But I want to keep it simple because, a lot of people don't have 100K to invest. So let's talk about 10K. It's a little bit more reasonable. Now, so I split it up. I got 5K. Okay. Now that 5K, I want to split that up. Now, how am I going to split that up? Well, I'm going to split that in half, right? So now I have 2,500 for something and I have 2,500 for something else. Now, this is where things get interesting, right? So I'm going to have my conservative $2,500 and then I'm going to have my more aggressive quadrant. That more aggressive quadrant is going to be made up of options, swing trades, perhaps penny stocks, garbage altcoin lottery tickets, right? That's what I'm going to split that up into, okay? Aggressive. So if I really take some losses in that area, I'm only risking at most, right, $2,500. Now, in that $2,500, there's going to be different allocations, and that's where that's really a personal preference, okay? And the conservative portion of the 2,500, that's what's going to go into the long term. Now, so let's focus on that. Okay. So the long term, like the long-term investing portion or the conservative portion, let's say gold. Gold is an area that I think will be higher in a year or two, especially with the way the current administration is handling monetary policy and the way we're just creating money all over the place. At some point, inflation is likely to get out of hand, right? Even though it's whatever. And the Federal Reserve, it's their job to step in and take control over it, which they probably will do at some point because that's what they were made for. But right now they're just letting it run rampant because they know that's how you create wealth. And they've done this before. This is not a new thing. So the point is, at some point, gold is going to have to catch up to that, right? So that's why I believe that, and that's a fundamental idea. And short term, I don't trade fundamentals, right? It's more of a long term thing. On top of that, the metals, the physical metals area, gold and silver and all that, there's a shortage. There's a serious shortage, and you can't get any physical, which means the paper side is probably going to play catch up, right? So with those ideas in mind, I want to be accumulating gold while no one is really paying attention. The other thing to keep in mind is this. Look at this. All right, let's just talk technical here real quick. Does this chart look bearish to you? There's nothing bearish about that chart. Okay, we're in a broad wave 4 consolidation. It's correcting the broader trend, which is bullish. So higher prices are likely ahead, right? Even though gold may test the 1750s, it's possible gold may test slightly lower to shake whatever paper gold is left, shake them out of their positions. That's fine with me. I'm looking to buy gold for the long term. Now, there's a number of ways I can do that. And the way I like to do it, and it's a sensible way, is stocks, right? And so my 2,500 now that I have allocated for my conservative part of the portfolio, I can say, all right, 2,500, I can split that up 1,000, 500, $1,000 will go into one stock, another $1,000 will go into another stock, and then $500 will go into something else, some other stock, right? And it doesn't all have to be gold, but gold can be one of the stocks. And when I think of that, I think of Newmont Mining. Okay, look at Newmont Mining. It looks very similar to gold. It's been consolidating for a long time. And look, you can pick up Newmont at some lower prices. It's near the range low. Now, this is where you step into some, right? When Newmont has a negative day, and there's been plenty of red days, right? Again, you buy 5 shares. I mean, how much money is this? $58 a share, $59 a share, almost $60 a share. So if you're allocating $1,000, right, you're not going to be able to buy 100 shares of this thing. You're looking at like maybe 20 shares, right, or 25 shares, something like that. And hey, that's fine. You say 20 shares, but you can't make any money with that. Well, if Newmont goes to $80 or $90 at some point, right, it starts to add up. Meanwhile, you haven't taken any ridiculous risk. So if Newmont, goes lower, and another one, Wheaton Precious Metals, okay, another one, plenty of opportunity to buy into this thing and accumulate shares. If you're only trying to accumulate 25 shares, it's 5 shares every time. You could do it twice a month, or you could do it when it's pushing lows, right? You buy your 5 shares. If wheat and precious metals gets really hammered for whatever reason, well, you're not overly exposed. You're building your inventory, right? Because the idea is when gold starts pushing 2,500 or 3,000 at some point, when inflation gets out of control and all that nonsense, then you'll have your opportunity to average out. But right now is your opportunity to average in. It's a hated market. As you can see, doesn't look like anything like the altcoins, right? Bitcoin and the altcoins and the stock market, everything's pushing their highs. Gold is struggling. So, okay, cool. That's what I want to see when I'm building inventory. I don't want to be buying highs. Now, if gold starts to go and this thing starts breaking out, what if I have not made my full allocation, right? What if I haven't bought all $1,000 worth? What do? You keep buying, right? It doesn't matter if you're buying on the way up. You're still buying your same allotments. So your risk is controlled, okay? You're going to be at an average price until you make your full target allocation of $1,000 worth. Once you're in and you have 1,000 accumulated, now you let the market do its job, okay? And you don't have to do anything. So when gold starts pushing its numbers, 2,000, 2,500, blah, 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 that will be the time to unload and average out. Just like with these altcoins, some people bought at, the March lows when they were worthless and everyone hated them. And now these things are at ridiculous highs. This is the time to unload and to average out. You don't have to sell everything. Like we always say that. You don't have to sell everything, but you should take something off the table because this is your opportunity to do so while the herd is there buying it blindly. Okay? So I hope that answers your question. That's a really long answer, but that's basically how I like to do it. It's a little different for everyone, but by splitting it up and by having target allocations and buying in small increments, I control my risk. That gives me a lot more control, and I can adjust as the market, if the market throws a curveball, I can adjust without being at the mercy of the market, without being shaken out of my position. Okay, my leverage is kept, I'm not really using any leverage, and you probably, for these type of trades, you probably shouldn't use leverage, or at least minimum. All right, so let's see what else we got here, okay? Okay, cool. Gabriel, I'm in the travel tech industry, and so naturally looked at current prices of BKNG. Turns out it is very similar to S&P. Any reason why one would want BKNG rather than the S&P 500? Okay, so that's a good question. So a lot of stocks are going to follow, for whatever reason, a lot of stocks are going to follow the NASDAQ or the S&P 500, okay? In fact, this stock, while it looks similar, it's actually underperforming a little bit because look, here's the NASDAQ. NASDAQ's pushing highs, okay? And BKNG is not pushing highs. So this here is a sign of relative weakness. If the NASDAQ pulls back, this is in a perfect location to sell off, okay, to get hammered, basically, because it's acting relatively weak, which means no one's really buying it. Okay, there was some covering, some short covering, whatever. Some people bought back into it, whatever it was. But with the S&P pushing highs and NASDAQ pushing highs, this thing should be up here, and it's not. So that's a sign of relative weakness. This is not something I would touch. Okay, not at this location, not at this time. So thank you for bringing that one up. I hope that answers your question. Your question was, any reason why one would want BKNG rather than the S&P? Yeah, there's no reason. You're better off buying the S&P or the NASDAQ for that, continuation of the breakout, if anything. But even those two, I'm not a big fan of those two at all, the NASDAQ and the S&P at these levels. In fact, like I said, I'm short. I'm short with options, and I'm waiting for that pullback. And like I said, they can't shake me out because my risk is defined. So if they want to keep pushing higher and higher and higher, and they grind my premium to nothing, well, that's the risk that I accepted at the time that I put on the trade. Okay, Arno, okay, cool. Are stocks, S&P, still part of the conservative pot? Asset prices through the roof? Well, yeah, so there are times, Arno, like we have the situation now where, yeah, the markets are at major highs. Here, let me pull up the SPX USD. All right, now look at this. I mean, ridiculous highs, right? These are all-time highs in these things. So what do you do in these situations? Well, as far as inventory goes, it's still okay if you have not fully allocated. All right, maybe you haven't fully allocated and you have some more purchases to go. You can skew your purchases and buy a less amount, right, to just compensate for that risk. All right, but if you're fully allocated, right, from much lower prices, this is really a place to distribute and to unload to reduce risk, not to really put on more. But I could have said that, I was saying that at much lower prices. So you have to, that's why you have to follow your plan. When you're playing the inventory game, it's really less about timing and more about the risk. So you can look at it and say, well, we're at all-time highs. I have $200 more to buy. Well, I'll buy $25 worth here. And then if it goes higher, I'll buy another $25. I'll just maybe make the purchases a little more frequent, but you don't want to overweight yourself at the top. You want to, take advantage of these little mini pullbacks. At the time, that didn't look too mini, but those situations is really where you should be putting on more, inventory, really not here. So if you're actively managing and you want to use that as a guide, you can do something like that. The thing is, after the fact, we look at this and be like, oh yeah, that was easy, right? You just bought it and it went back up and that's what it does. Okay, great. But there's going to be a time when it does this and it doesn't recover. So that's why, that's the benefit of the small bite. So if you took your small bite here, or maybe you purchased instead of, $100, maybe you bought $150, okay, or whatever. And great, now that money is working for you, great. But there'll be a time when it looks like this and then it breaks the support. And when you do that and you bought some, well, okay, you're not going to be, as long as you're not overweighted up in this area, you didn't buy most of your inventory up in this area, you're not going to be in a bad position, right? And that's when you want to be prepared now and wait for these better prices. This is where, that's why timing, instead of looking at the chart, instead of saying, okay, on the 1st of the month and on the 15th of the month, I'm just going to make my purchase no matter where the price is. That will protect you from overweighting at a particular area. Because if you're using discretion and you're not very experienced, I'm going to buy more now. I'm going to buy more now. And next thing you know, you're overweighted in a very vulnerable area. Don't want to do that. Okay. If you want to overweight, if you want to add more at a more aggressive rate, you want to do that at lows. Okay, not highs. So that's how I'd answer that question. Okay, let's see what else. So by the way, at GreenBridge, we do talk about this stuff a lot, and our portfolio ideas, we send them out by text and by email. So whenever we're trimming something or we're putting on a new position or whatever it is, obviously you get all that information in your text and in your email, and you have a much better idea of how we're timing and what stocks we're doing that with. That's why we started GreenBridge, because we had a different website over a year ago, and it focused just on Bitcoin and all that stuff. But the thing is, we were involved in so many other things that the name was misleading, because people came to us expecting, Bitcoin day trades, and that's not what we do. So we changed our name to GreenBridge, which basically encompasses everything, right? Stocks, options, Forex, the whole thing, and also different strategies, swing trades, and portfolio management. So our website explains all that stuff. You can check it out. All right, so let's see what else we got here. Okay, so still part of the conservative pot. Right, so yeah, so I answered that question. Okay, cool. All right, no problem, Sean. So let me see how I'm doing with time. So I have a few more minutes before I wrap this up. Great questions, everyone. By the way, if you're new to the GreenBridge, my stream here, please press the like button. Let me know that you like the video so I get some good feedback. And also register for the channel so that you get an email notification every time I stream. I try to stream these twice a week. And then we have Talking Markets, of course, tomorrow at 4 p.m. Eastern time, where we do our show, which covers more of a fundamental aspect. Andrew comes on, Henry comes on, and we talk about markets from a different perspective, where these streams that I do are usually focused on very short-term swing trade type of strategies. And also, I like to spend more time on these answering people's questions. All right, so I pretty much covered the gold area. I covered, some of those altcoins. I covered Bitcoin. Any other questions? Let's take a look at the dollar index real quick. Now, the dollar index obviously is, affects a lot of things, right? The dollar index is a basket of currencies against the dollar. And I believe the euro is the heaviest weight. So that's why the euro will be inverse. The euro against the dollar will have an inverse chart, relative to this. And charts like dollar franc will look similar to this, because it's the dollar first against the franc. So look what's going on here, right? The dollar this is not a bullish trend, all right? Now the recent price action is tried to get something together with that little higher low and higher high, but bearish trends don't take out resistance levels, right? And look, you have this old support. What is that? What is that? The 90, basically the $90 area, and it didn't take it out, and it developed that lower high. So the dollar is still in a bearish trend, all right? Which until this changes, you know, a dollar taking out these lows means bullish pressure for things like gold, possibly Bitcoin, and the stock market, which are anti-inflationary assets, right? The thing is, what is the dollar going to do right now? It's stuck in the middle here. So yes, the trend is still bearish, but it's trying to change. What can change this? Well, if the Fed comes out with any kind of surprise rate cut out of nowhere, which, you know, you have to be open to it, it can happen, that will change this trend. So just something to keep in mind. Also, the bond market can, you know, naturally start changing things depending on how the bond market goes, right? The treasury market, that can also affect interest rates. So just something to keep in mind. You don't have to sit there and stare at the bond market all day. It's like watching paint dry. But the point is, the dollar index chart is something you just kind of want to loosely be aware of, right? If it makes that lower low, we're probably going to see higher prices everywhere else. If it turns, then that's probably going to be a part of the signal of the broader market pullback, okay? Because a stronger dollar is obviously anti-inflationary. All right, so Gabriel, have you done Ethereum and DOT? So I took a look at DOT earlier. I haven't taken a look at Ethereum. I'll show you DOT again real quick because DOT was a swing trade I sent out a couple of weeks ago, right? Let me show you the DOT orders. And again, what's nice about DOT, where did I put that? Is it on Bittrex? Let's see. No, hold on. DOT USD. I thought it was on, maybe it's Bitfinex. There it is. So this is the swing trade that I sent out a few weeks ago, right? As you can see, the 1% risk. We help our members, you know, that's the risk that we're using. So we're risking 1% of available capital for the money that's allocated towards swing trades. Again, 1%. So if we're wrong, and we can be wrong 10 times, we're not going to wipe out our account, right? That's how you control risk. Now, some people don't like this idea because when you make money, you have a smaller position. But the thing is, you have to protect for risk first. If you want to make a lot of money in a trade, you're not going to do it with a small account, right? People, I want to make $1,000 in a trade. Okay, well, you better have a $30,000 account or a $50,000 account. If you're dealing with an account that's less than $10,000, you have to keep everything within proportion. Otherwise, you take risks that are too big. That's why people have such a hard time. All right, anyway, so DOT's looking good. I mean, we have this nice outside bar that's developing. It's at an inflection point. I'm looking for the next target of 33.50. Okay, so we'll see. It's got a little bit of room to run there. If Bitcoin can follow through, then I'd be looking for this thing to touch 33.50. And these things are all setting up. I mean, this is a setup to go higher, right? You have the higher low. I'd be looking for that higher high. So looking for that, you know, and we'll see how that goes. But again, we sent this out by text. We sent it out by email. And again, I sent this out weeks ago, and it's been doing well. I sent that out like back here. I'll show you where I sent it out. It was like right in this area here. And we actually had to take a little pain on that one. Was it there or was it here? Let me see. Yeah, I believe it was here because it almost stopped out. The stop was at 14, and this thing went to like 15 something. All right, but we stayed with it, and now look where it is. So that's a consolidation breakout. Now Ethereum. So Ethereum, this thing again, it's got the same type of pattern, right? We're seeing this pattern across the board. Look at this bullish pin bar. These pin bars are all over the place. Okay, now that's a sign that things are likely to go higher, at least for tomorrow. And this thing is pushing these highs. What's today's high? 1839. So it looks like this thing may be going for the 2K, you know, the 2K psychological resistance, which can act as a inflection point. But you know, for a swing trade, okay, you want to take the pin bar and you want to use the pin bar low 1660 to define your risk. All right, but there's a lot of risk here because you're near this peak. If Bitcoin fails, these things are probably going to pull back hard. You have to keep that in mind. The next support for Ethereum is 14, what is that? 1420 area. All right, that's the kind of risk you're looking at if you get into this thing around here. Now, if it works its way higher, great. But at some point, it's going to fail, and you have to keep that in mind. So that's why I hesitate to send these out. These are very aggressive swing trades because of the location. This thing may run to 2K. So what is that? If you buy this thing now at 18 and a quarter and it runs to 2K, right, it's 150 points, but you have to risk 400 points or something like that. Or, well, the pin bar low would be the risk. But if it clears that, you're looking at a steep pullback towards support. That's high risk, proportionally speaking. So reward risk is not very attractive. And right now, volume is very light because of the holiday. So this price action isn't the most reliable. Okay, that's another thing to keep in mind. All right, so let's see what else. So that's those two. All right, no problem, Gabriel. Goran, good to see you. You do a nice job for beginners. Oh, cool. All right, thank you. That's the idea. I mean, I'm trying to make this accessible for people there's a lot of new people that are interested in this. I was at a get-together a few days ago, and a couple of people are like, oh yeah, I'm investing in stocks now. So, not a good sign for when people like this when they're brand new like that, and now they're like getting into it, and the sign of a top. Sorry. It's just contrarian. That's the way it works. When people that are afraid of bottoms are thinking it's safe to buy at the top, that's usually the top. Okay, it's the bottom is where the low risk is, not the top. So anyway, so Goran, I'm not picking on you. This is why you're here, because I'm going to show you how to think more like a contrarian and at least have better control of your risk. And that's the main thing. You don't have to be a market professional that has precise timing. You just need to be able to control your risk. So let's see what your question here. Can you add some comment for DGB and ADA? Okay, so DGB, let me see here. Now you're talking against Bitcoin. So let's take a look. Is that, okay, let's see. So against Bitcoin, I'm not a big fan of these things, these cross pairs. Okay, I like against the dollar because it's pretty clear. The cross pairs can be confusing, and the charts aren't as reliable. But let's take a look at the levels here and let's see what you have. Okay, I just prefer to go against the dollar. Now I know a lot of people, they may take a trade using their Bitcoin, against one of these other coins, right? And in that case, remember, like, in order for your chart to appreciate, your coin, like this one, needs to appreciate faster than Bitcoin, and then you'll get a move like this. Just like with currency pairs, right? The euro against the dollar, or the euro against the pound, for example. If the euro is going higher faster than the pound is going higher, then your chart will show a bullish candle. Okay, but if the pound is going higher than the euro, but they're both going higher, your chart will show you a bearish candle, right? That's why I don't like cross pairs. I'd rather go against the dollar because the dollar is stable, so, or more stable, I should say. All right, so as far as this goes, this shows that this thing is moving faster at a faster rate than Bitcoin. Okay, that's cool. You do have this pickup, but here's the thing: the bigger picture on this thing has not been there. Let's zoom out a bit. It's been a little iffy. Okay, not the best looking chart. There are many charts out there that look better than this. So you had a bullish trend up until like maybe October. It started to fail, and the corrective move came, and it could never really recover. Now it's trying to. So you're facing some resistances in something like this, right? You just cleared one today, which is a good sign. All right, at point, all these zeros and then 147 Bitcoin. You just cleared that, which is good. You need this momentum to continue. All right, but I mean, so yeah, that's a breakout. If you're in it, okay, that's a good sign. If you're not in it, you can try taking some there, but again, your risk is going to be defined by this low here at 112. And like I said, it's confusing. I'd rather trade against the dollar. So, but the chart is starting to show improvement. Okay, at least you have that. You do have a higher low. You do have a resistance break, and it's a potential breakout. But your risk is going to be defined by that higher low. Okay, and the next target or the next resistance is up here in the, what is that? 190 area, and you're looking for this thing to test back up into these previous highs, which is 236, up in that area there. Okay, again, you're going to need this thing to appreciate much faster than Bitcoin for that to happen. All right, and the other one is ADA against Bitcoin. Now Cardano, you know, let me talk about Cardano first against the dollar. And I'll go against Bitcoin here. I mean, it looks very similar, but this is one of these overhyped coins. All right, I had someone contact me a few weeks ago about this one. What do you think of this? And I'm like, okay, top. Now, obviously, this thing has gone a lot higher since I got that text. And my answer was, well, it's a lottery ticket, right? I didn't discourage him. I didn't say don't take it. I just said, just keep in mind it's a lottery ticket. Now, it's acting like Bitcoin and Ethereum, right? It's got the pin bar, just like they do. So this thing looks like it's setting up for another leg higher. But when I see these vertical moves, I'm not a fan because it's not a hated coin. This one in particular seems to be overhyped, and the whole world is interested in Cardano. Not a good sign from a contrarian point of view. If anything, I'd want to see it at a support. So you have a potential support here at today's low at 80 cents. And that's where you have to measure your risk from a swing trade perspective. As far as inventory, if you're going to buy any for longer term, I would take a tiny bite. Okay, so again, if you're going to allocate $1,000 to something like this, you buy $50 here, okay, which is hardly any. And when it pulls back, then you can buy more. That's how I would handle something like this. Now let's take a look against Bitcoin. And it's a similar situation. Okay, so if you're going to do this with Bitcoin, you can still play the inventory game with something like this. You have the same type of setup, pin bar, bullish pin bar. It looks like it's going for another leg higher, which means Cardano is appreciating faster than Bitcoin is appreciating. But just keep in mind, when they turn and Bitcoin turns, Bitcoin is still the leader. So these things are going to suffer, right? I prefer to take my bites, my small bites near support levels, okay? Or something like that. You want to do the timed purchases. You know, you just, when you're near highs, take a smaller bite, right? So instead of $100 purchases, you do your $25 or $50 purchases. When things get hammered, you know, or you get like a pin bar looks ugly before it becomes a pin bar, right? You just a large red candle and you're pushing the lows of it. Hey, you buy $100 worth or something like that, right? Now keep in mind, just because you're buying that low doesn't mean it's going to recover after you buy it. It may go a lot lower. What protects you from that is the small size that you purchased, okay? And if it goes and reaches some ridiculously low price, then you can buy some more, okay? That's averaging in. Again, you really have to believe in the project long term to play that game. And I don't like to do that with altcoins because I don't believe in most of them. And I think just like the .coms, I think many of them are going to go to zero. So I'd rather not play the inventory game with most of these. You know, Bitcoin has that longer term prospect because of all the, you know, changes that we've seen over these previous 2 years and all that kind of stuff. But even then, Bitcoin is a highly speculative asset. So if I'm going to play that inventory game, I prefer to play it with stocks that I know, you know, are solid and that pay dividends and they're not going out of business anytime soon. Okay, Walmart is not going out of business anytime soon. So that's what I prefer to play that inventory game with. Stocks like ExxonMobil, stocks like Microsoft, I doubt they're going out of business. Okay, they're not some garbage altcoin that are full of hot air and all these grand promises. They're companies with proven track records and been around a long time, and they pay dividends, right? They're good companies. That's who you want to play the inventory game with, all right? Those are solid conservative assets. These things are still highly speculative. It's something to keep in mind. Now, some people you hear, oh, they got rich on Cardano. Oh, this guy bought it at, you know, when it was worthless. Those are lottery tickets. Those are very low probability. They didn't sit there and say, I have a vision of Cardano and I believe Cardano is going to be the future. And no, they just bought it. It happened to be a lottery ticket. You know, they bought into some hype and it worked out. Lottery ticket. Okay, there's plenty of examples of these type of lottery tickets. So that's the game you're playing. I just want you to realize that. Okay, so I don't want to discourage investing in these. I just want you to understand the risks and that they're not solid assets like, you know, a quality stock. All right, so just wanted to mention that. All right, so I'm in an hour now. I'm going to wrap this up. Great questions, everyone. Hey, no problem, John. So I hope that answers your questions. Thank you all for the participation. Again, if you want to check out greenbridgeinvesting.com, all the information for our site and what we do is in the description portion of this video. So you can just click on show more and you'll see all the links and everything else. So I don't have to explain it. We do have a 7-day free trial and all that stuff. And we do have a free chat room. So please stop by, check it out, ask us some questions. Okay. So other than that, I want to thank you all very much for taking the time to participate in my video, and I will see you next time. Okay, again, tomorrow is Talking Markets with Mark and Andrew at 4 p.m. Eastern Time. I'll send out the link, or if you're registered for the channel here, you'll get the email notification from YouTube as well. All right, so please stop by, check it out, ask some questions. We always like to have fun. We like to have fun with that show as well, okay, and all that. So it's a fun thing to check out, and you get some good information out of it. All right, everyone, enjoy the rest of your day, and I will see you next time. Thank you for watching.